Started.
Yeah. Continue. Okay. Ready? So, yesterday I was discussing about depreciation. So we covered till the income tax act. So there were three things. One is the block of asset, and one more is the section 32 which talks on depreciation, and the third one is the rule 5 which gives the rate of depreciation. Link back. Which are favorable. Now to in the okay. These three things were discussed. That is the block of asset, which is section 32 and rule 5. Today I will talk about account. For the company entity which are company for which depreciation is applicable. So this is very important. Because most of our clients are a company. So what are the things which I need to do? Why this depreciation is there? First is, I have to see section 123. What this is, this talks about actually dividend. But for me, company is profit oriented, correct? Right? So company has to give dividends to its shareholder. So in order to give dividend to shareholders, the net profit where you have to arrive should be after providing depreciation. So depreciation becomes very important. Before providing, if you don't provide depreciation, you can't give dividend. Okay, the net profit has to be calculated after deducting the depreciation. It's says under section 123. Understand? Section 123. Okay. So this depreciation has come from Schedule 2 of Companies Act 2013. So main crux what we should know is, in Income Tax Act the rates are specified. So rates I can't do anything, it is specified to me. But for Companies Act, useful life is the concept. Useful life has been specified. What is the useful life means? For every asset they have given this much years it may exist. Okay. So useful life is very important. So that useful life has been given Schedule 2. Read out.
We are using new link, sir.
Zoom link. I have not logged into Zoom link. I will share the recorded video for today, because I can't click one and edit it. So Schedule 2, they are given useful life. So just rub this bit there. So if they begin useful life, I have to convert my useful life to depreciable rates. So because depreciation amount is nothing but my value of the asset multiplied by depreciation rate. But if they are given useful life, how to convert it into depreciable rate? So for that, I have two methods. For what? SLN, and one more is WD, return down value method. So if I first talk about SLM. SLM is very easy. So depreciation is calculated on the original cost. I told you yesterday. Depreciation is calculated on the original cost. For this, depreciation rate is equals to depreciation amount divided by cost of asset. So whatever the cost of asset is, I have to divide the depreciation amount. But how will I get the depreciation amount in SLM method? So for that, they give one formula. That is nothing but cost of asset less realizable value divided by useful life. So this useful life is given by schedule 2, correct? So I have to take the useful life, what they are given in schedule 2, I will know the cost of the asset, and this realizable value is very important. See, this realizable value for the purpose of Companies Act, it should not be greater than 5% of cost of asset. The realizable value should not be greater than 5% of the original cost of asset. Why they are given a cap? Because for me, after that useful life period, I assume that the asset will be sold at 5%. It may go above 5% in reality, but for the purpose of depreciation, I will restrict it to 5%. You know. So, based on this, I get the depreciation amount and the depreciation rate. Meeting. From 5 minutes till that. Okay. So this is what it is. Depreciation amount, there is a formula, that is cost of the asset minus the realizable value divided by useful life. Useful life is given in schedule 2 of Companies Act. This is only applicable for companies. I am restricting myself to companies.
It should not exceed 5%.
Yes, the realizable value should not exceed 5% of cost of asset. Next comes WDV. So the same depreciation amount is calculated on the balance value, not on the original cost. For first year it will be original cost, but on the later years. Now the depreciation rate, for this there is one formula which they have only specified. That is 1 minus S divided by C to the power of 1 divided by useful life. So this is the formula. This has to be multiplied by 100 to get the rate. So what is this? Yes.
Yes, sir, repeat that.
1 minus S divided by C. I tell you what is this one.
Yes,
S divided by C to the power of 1 divided by U. So S is nothing but my realizable value. C is nothing but my cost. And U is nothing but my useful life.
Formula will remain for the realizable value will remain the same.
Realizable value is as good as this. It should not exceed 5%. Even in WDV method.
Cost of the asset is
Useful life.
Cost of the asset is known.
Yes.
As per schedule 2,
Yes.
useful life program.
So the moment I acquire any asset, so if I have to calculate depreciation, this has to be.
So now, one question what I have. Majority of them, they work irrespective of they are a private limited company.
Every company, any company. So the definition for the schedule is company.
Registered under
Companies Act. Correct. Only except the electricity company.
Fair enough. Other than, okay,
They have
not
a
on the SLM, they work on WDV.
Yes.
But whatever I have seen, as an individual, what I have seen is, they work on income tax method, what we have discussed yesterday. Where the rates are predefined.
Yes.
Nobody works practically on this method.
This is for books of accounts. This is for computing the income tax. So that's why when it comes to company, my books of accounts should use this. It can't go to this. For the purpose of income tax, I do this.
But the fact is, everything goes up.
No, it will never go. Nobody will sign that. An auditor will never sign this if they have done that based on this.
Because I have seen that, that's what I'm saying.
Then that is gross negligence actually. Because for the Companies Act, is clearly specified as per Schedule 2. That's auditor or chartered accountant who is signing the audit report should have to see the depreciation has been calculated based on this. So that's why there is a difference in method. Due to this difference in method, there is a concept of deferred tax that I'll tell you later. Because I have two different methods here.
Depreciation and
Yeah.
income tax
Yes.
depreciation.
Thus two different methods are being incorporated on me. So I have to see whether the tax implication on that I will take up later. So this is the calculation. So here one important thing what we have to see is for both SLM and WDV, for the purpose of income tax it was block of asset, but here it is individual asset. So this has a separate value, this is separate for the purpose of Companies Act. That is logical. Income tax, why there is a difference between individual asset and a block of asset? My income tax had block and the Companies Act has individual asset.
Here, in this individual asset, like useful life is
Ah.
one thing.
But even here they have given us some rate that can go for indefinite period. The thing is here in income tax there is no useful life. After that I have to exhaust. Practically, for income tax purpose, why they have created blocks and not individual?
They have not taken, first thing, they are not specified the useful life.
That's
Maximum
okay.
by around 6 to 7 years, here the entire thing gets written down and
Correct. See, this
you
is-
have to infuse
Companies
it.
Act is basically on useful life, and here it is basically on the rates which are given. But why the concept of block is there in Income Tax Act and it is not there in Companies Act?
Suppose if the asset is still in a useful condition, it gets compensated.
See, for the purpose of Companies Act, what is the act is for? It's only for the regulation of companies. So to have a lot of, India has a lot of companies, right? So this goes on what practically happens. Income Tax Act is a revenue nature act. So he doesn't want, the income tax people doesn't want, like I have, let's say if I take Apollo as an example, they have around 2.5 lakh worth of different types of asset. So if a person of income tax has to see the depreciation, he can't go and see the everything because for him it is at the end of the day only an expenditure. But for the Companies Act it is different. I will maintain all those 2.5, a fixed asset register, everything. But for the purpose of income tax, I just want in TGBP only one head as depreciation. You're getting my point, right? For him it will be easy to assess the books of accounts.
Irrespective of your
How much
asset
here
or
is? So
plant and
even
use.
if I have some 5 lakh different types of asset, I can group it under only these 4. Only block. That is very easy for me to write it up. I mean, to calculate the income tax and also the expenditure. For the purpose of company, I do maintain in detail. Yes. I tell you, this depreciation here, I told this was for when it was put to use, correct?
Correct.
The triggering of depreciation starts when put to use for the purpose of income tax.